For more on our top line story and for his take on where he sees opportunities in the Canadian equities market, we're joined by Colin Stewart. Colin's CEO and Portfolio Manager at J.C. Clark Limited. Thanks for coming in. Good to see you again.
Great to be here, Paul.
I'd love to hear what you think about our top line story today. That's Suncor Energy. It's nothing new in this trend, really, but the news from Suncor is fairly dramatic. Profit and cash flow exploding in the most recent quarter, and the company, in very broad strokes, pledging to return much more of its excess free cash flow to shareholders in the form of share buybacks and stepped-up dividends. Yeah,
I mean, I guess it tells us a couple things. One, they clearly have confidence in their business if they're planning on returning that much cash to shareholders through buybacks. Obviously, as you point out, very strong cash flow right now. And I would say they also believe their shares are undervalued if they're buying them back or trading below intrinsic value, which is normally when it's a good idea for companies to buy shares back. I suppose the only two read-throughs people might, or things people might question, investors might question, would be, what are the really long-term prospects of this business over 5 or 10 years? Are they as good as they are today? And number two, does the company not have a lot of good opportunities for reinvesting in the business through capital expenditures? Right. And sometimes companies, if they're buying back too much stock, are criticized. Well, you must not have good reinvestment opportunities. Therefore, the only use of your cash is to buy shares back. So, overall, I'd say a positive, but clearly some concerns longer term about where the energy business might stand 10 years from now, and maybe it's a better idea to pay down a bit more debt or something. But I assume this will be well received by the market.
What kind of exposure on behalf of J.C. Clark clients do you have in this space right now?
Yeah, we have modest. We're not a huge. We don't have a huge focus as an investment firm on the commodity sector in general. Sometimes we tend to play more of the service companies and peripheral companies, but we do own a few oil and gas service companies. We own lumber companies, so we own some uranium. So we do participate a little bit in the commodity space, but I would say overall we're not huge investors in the energy space.
Okay, you like Canadian equities at this point. You made the point in some notes that you've shared with us before today's appearance that you think Canadian stocks can continue to outperform many of their peers around the world, many of the other major national indices in this higher inflation environment.
Yeah, I think Canada, number one, the country and the economy is well positioned. I think above average population growth because of a pro-immigration policy, obviously very deep natural resources here in Canada, which are going to become more and more valuable when we think about some of the key trends happening, things like water shortages. Canada obviously has abundant resources of fresh water. Electrification of vehicles, things like copper and lithium. Canada is very rich in those minerals. One thing that stands out to us is just the valuation discount. If you look back over the last 3 or 4 decades, the discrepancy now between the PE multiple on the TSX Composite and the S&P 500 is pretty much as wide as it's ever been, almost 5 multiple points. So in other words, the S&P is trading at about 18 times forward earnings and the TSX only at about 13 times. So that gap is wider, much wider than it's historically been. And we also think we're at the beginning of a potential commodity cycle, maybe new capital flowing into the Canadian market. Obviously, over the last decade or two, we've seen a really pro-U.S. stance with all the technology companies, capital flowing into the U.S. market, but I think that's now starting to reverse. And as you pointed out, the Canadian market outperformed last year, and we certainly believe that could continue.
You mentioned water shortages as a Canadian opportunity. How are there opportunities for investors in publicly traded equities in Canada in water?
Yeah, it's not easy to find. There's a few companies, I would say, that sort of focus on water infrastructure, cleaning water. A company called H2O Innovation that's been sort of an up-and-coming small-cap company that we think is pretty interesting. And we own a business called Logistec, and half of their business is sort of replacing aging water infrastructure, which is a big theme in not only in Canada but the U.S. Sort of fixing the old piping underground to make sure our water's clean, removing chemicals from water. So it's hard to sort of find pure play ways to own water resources because those aren't typically owned by corporations. But I think overall that sort of water and infrastructure play, even to fix the water infrastructure, is an interesting theme. And as I mentioned, a few ways to play that.
And electrification. Now, there are numerous large cap Canadian stocks that specialize in the provision of electricity, utilities like Fortis, Hydro One, Brookfield Renewables, and so on. What are your thoughts on electrification as a Canadian Canadian advantage?
Yeah, I mean, I think overall the renewable sector, as you point out, is pretty deep. There's a lot of very successful, whether it be Northland Power, Brookfield Renewable, successful renewable companies in Canada. So that's one angle. And then I think just the natural resources that would be needed and the metals that would be needed to go into battery technology, things like lithium and copper. Obviously, we've seen, a lot of interest in even some of the car companies like Tesla investing in lithium mining companies to get exposure or to get access to those minerals, which they'll need to put into the battery technology. So I think that's, again, we own, for example, Capstone Copper, which is another company that, copper is a resource that I think is going to be pretty integral to the electrification of the overall economy. And, that's another way to participate in this theme.